Simon, floor is yours.
Thank you so much. Good afternoon, everybody. How are we today? We feeling good? Yeah, I'm seeing nodding. Yeah, look, and thumbs up. You guys are an amazing crowd. Thank you so much for being here. Hi, everybody. I'm Simon. I'm going to be talking today about fintech collaboration with financial institutions, but it's not me that's talking, actually. It's an amazing panel, and I'm going to be asking the questions. If the voice sounds familiar, you might know me from podcasts like Fintech Insider and elsewhere, and I have a number of other affiliations, and I'd love to meet all of you afterwards. So first, Alexey, do you want to introduce yourself very briefly?
Thank you very much, and great being here. Thanks for this invitation. I'm responsible for the macro structuring team in Europe. So we're a group of product specialists, which is responsible for client solutions, product innovations, platforms, from kind of idea generation to execution within global markets.
Fantastic. Good to have the bank perspective on all of these things. Christian, do you want to introduce yourself, sir?
Thanks, Simon. Great to be back here, everybody. I have been coming here for many years. FMLS22 is my background. I used to found CFH originally. Today called FMLS22. I've been coming here for many years, and it's definitely the most buzzing event I've seen. It's quite hard to hear in here, actually.
Fantastic.
But I'm today founder and CEO of United Fintech, and we invest and acquire specialized capital markets businesses in the banking space.
Fantastic. So you have an investor's perspective. Interesting stuff. Paul, do you want to introduce yourself, sir, and what you do?
Yeah, so I'm Paul Brown. I'm the COO of TechPassport. Been in financial technology for about 10 years or so. Previous TechPassport was really looking after the regulation side, decisioning, data, and about reducing credit risk. And this panel is really interesting, coming from a fintech to actually working in a company where we're trying to build a bit more harmony between tier one banks, lenders, and also small suppliers or fintechs. So yeah, it'd be interesting to hear what people got to say today.
Yeah, the sort of the glue between the fintech companies and a fintech company yourself. Another wonderful perspective to bring to this debate. And I think to round it out, sort of the independent voice, we have Fernando from McKinsey. How are you, sir?
Nice. Very nice to be here. So I'm a partner in the London office for McKinsey. I lead our work with the fintechs in the UK and in Europe. And I also work alongside financial institutions, where we are helping them to try to break a little bit this equation between fintechs, collaboration, playing against them. It's a pleasure to be here.
Well, if there's one thing ringing in my head right now, it's don't hate, collaborate. But my first question was really, for a long time when I spoke to senior executives, Fernando, that I heard senior leadership saying fintech is a threat. They're coming from my customers. I don't like this fintech thing. Do you think that fintech is a threat to financial institutions, or is it more of a partner? Fernando, do you want to start out, and then maybe Paul?
Yeah. So I think at the core, they are both, right? We do observe, I think first and foremost, the first thing to recognize is that fintechs are now an extremely relevant player in the market. In the top 7 economies in the European Union, we have one fintech in the top 5 banking institutions. And in Germany and Netherlands, we have 3 fintechs on the top 5. So I think the first thing to recognize, irrespective of collaboration versus competition, is that they are an extremely relevant player. Then when we look at the 2 angles between competition and collaboration, we see very relevant plays in the competitive side, where by applying great experience, being very aggressive on pricing, and being really good in innovation, fintechs have been able to really grasp and evolve in the numbers of customers they acquired. And if you think about digital banks and payments, we can see those elements. Then in the flip side, in the collaboration, we see areas like technology, we see areas like speed to market and proposition improvement, and we see again innovation actually playing a big card. And across all of these 3, there's a lot to be said there. And I will not take too much, but if I just pinpoint in each of them. Technology, we see open APIs, and data, a lot happening there. We see a lot in ledger, core banking systems. We see a lot in the even blockchain and automation of back office. So we see a lot happening in how banks are actually absorbing fintechs into being providers and become more efficient there. Maybe the bread and butter of this collaboration sits on these vendor relationships to improve the proposition and speed to market. We have a full ecosystem that maybe KYC, digital authentication is something that's quite strong. Some other areas like infrastructure on payments, where we have Wise in London providing infrastructure to banks to really pinpoint their payments. So there's a lot there. And finally, in innovation, there's an interesting side where you see these fintechs providing offers for customers, but also leading the test ground for banks. So you see them embedding finance. Robo-advisor now is something that we see as common. 5 years ago was not, when start being cracked by some of these startups. So there's a real relevant space in collaboration.
Don't hate collaborate. Paul, what are your thoughts? Is it naturally adversarial? And given your experience of trying to bring these things together, why do you think that sort of adversarial opinion was there? So 2 questions.
Yeah. So I think when we look at it these days, when we look at the financial technology, I think probably a few years ago, you could probably see it as more of a hindrance to the banks trying to keep up with what's going on, or the big suppliers. But I think now, I think you have to look at open banking to understand that it was such a quick speed to market that the banks just didn't have the process in place, or the resource, or the ability, the innovations team to go out and actually put the stuff in themselves. So there was a lot of fintechs that went out and done loads and loads of work around open banking, and then the banks started working with them. But still, the release was quite slow. It was quite a long-winded process for them to get the right APIs in place for the fintechs to use. I think the financial technology companies are there to innovate for the banks and with the banks, and be able to support them through a lot of changes and challenges that the challenger banks are offering to them now. So I do think as we go more and more in the future, the financial technology companies will be more of a support, will be more of a right-hand man rather than another company that's external to the business.
It's interesting. It kind of links exactly to what Fernando was saying a moment ago about the sort of the difference between direct to consumer and technology provider. And I think that point is one you've both echoed, which is sort of speed to market of some of the technology providers benefited some of those direct to consumer fintech companies. But when those direct to consumer fintech companies became big enough, suddenly those technology providers made sense for the banks too, who were also trying to become digital. So that time to market is a really interesting point. Christian, what are your thoughts as you look at that space? Do you think it's collaborate and compete?
It's a really interesting question, and I think I look at it slightly differently, actually. I look at the space, and I think in the next 10 years, the banks are under massive pressure. And it's probably more interesting in the next 10 years in this space than in the past 100. I look at kind of a bank not as kind of one institution, but it's actually the sum of 100 small niche players, if you think about it, right? And in each niche player, you have tremendous competition. So a bank is actually getting split up. They're getting, there's a concept called shadow banking, which is stuff that's actually banking happening outside banking, which is interesting. And that's happening across, whether you're talking like loans, financing, all these things. On the trading side, you see the same. So banks are really under heavy pressure. And I think they will die unless they change the next change. Sorry, Alexey, but so I think they have a choice now. Are they going to continue to do in-house stuff and try to do it themselves? Or are they going to work with these massive, you can say, legacy providers, or are they going to look for the more innovative fintech companies? And I think that's where, look, if you take Fernando's point, there's two ways to look at it, and I agree. There's a collaboration, and there's also, you can say, a threat. And the threat, whether this is fintech or big tech, is no difference, right? You have to look at these 100 pieces and say which of these pieces is who's going after what. And in all the pieces, you have different people going after different things. But to kind of solve those for banks, they need to look at niche players in these niche pieces on the technology side. And that's where the partnership comes in.
Yeah, I think when we say banks, we're talking about 100 different things. What Alexey does in market structure is, and for his clients, is very different to somebody who runs a branch, which may feel more competed with. Alexey, is it worth just giving your perspective from inside the bank of where you see technology providers and where there is or is not a threat?
Yeah, I mean, my perspective comes from working with our institution clients within the global markets division at Bank of America, and of course, I think the main demand from of clients there. So I think there are two very important angles. One is the client demand. So and typically they want things to maybe happen faster, cheaper, but also secure, without as less disruption as possible. Because if you are a large pension fund or an asset manager and you already trade currencies, commodities, equities, in a certain way with your bank for many years, you have credit relationships, across various products, then it is much easier to add a new enhancement or a new product or a new asset to the existing relationship, rather than necessarily doing it with a new player outright. I think it's number one. And second, I think which is also probably people appreciate only after some time, is the regulation, which on one hand makes certain things a bit slower for banks, is there for a good reason. I mean, it has been some time when we had a bank failure, and outside of regulated banks, I think especially the last few years and this year in particular, in some areas, it has been much more often. So and clients do appreciate this. They want security, they want stability. They want not necessarily disruption at all costs, but more utility, which fits ideally within their current processes.
Regulation is a feature, not a bug. And when you have distribution, in particular with large institutions, actually that's a very hard thing to go build if you're a fintech company who is going to find that quite difficult. So seeing folks like yourself as a distribution channel for something new that they do, like a lot of the providers here, for instance, are probably more naturally inclined towards partnerships. Great points, Alexey. And I think you're starting to lead on to my second question, which is, okay, let's say I am at a bank, I am at a financial institution. What are some of the benefits of collaborating? I think you can offer distribution to the fintech companies. You are regulated. That's what the fintech gets. But what do you, the bank, get? Fernando, you talked a little bit about time to market. Are there other things you think about from a financial institution and a bank's perspective in terms of benefits?
Yeah, and I think it goes back to, I think that there's three core points that we see. One is around enhancing of propositions. Fintechs very easily are trying to solve very small parts of the puzzle. They are quite focused. Some of them, specialists, right? Some of them focus on just one thing and just one thing. OnFido is an example of quite of a large fintech these days. They do KYC, AML. They've been focused on just one thing, identity verification. And by plugging and focusing that, they are enabling a better solution. So there's something around how fintechs are effectively making processes more streamlined, seamless to the customers. So that's one side. The other side is time to market. And time to market not only by adopting solutions that exist, but more extensively by adopting a mindset of collaborating with fintechs. That means that most likely engineers are engineers that code in a way that is more seamless with fintechs. Means that the banks are adopting cloud, adopting DevOps, a set of principles in Agile and others that are enabling more time to market. And third, around innovation. And the innovation side is quite an important one, because when we think about the bank's ability to create and launch new products, we know it's smaller. We know it's slow. And fintechs can have a real tangible throughput. Many of them fail and have products that actually are not effective, but the ones that succeed, they open the door for innovation for banks. So this dynamic is actually quite productive for the financial market as a whole, make it more competitive and make it creating new innovation for customers.
It's almost like externalizing some of the R&D, and then you can choose to bring it in at a later date.
It's a great point.
Yeah.
Absolutely.
So I want to come to Christian on this. Have you seen any good examples that come to mind of where the financial institution has really gotten value out of collaborating with a fintech provider or M&A or something along those lines, where they've looked at sort of externalizing the R&D?
Well, I think if I take a general approach, the banks are starting to look at what is core competencies for us, right? So what can we compete on, and what if I'm Bank America, what can I do that is better for my customers than Goldman Sachs, for example? I think that's an area where you as a bank, you want to keep it in-house, you want to do it yourself, you want to own the IP. And then you have a whole list of other things which is non-core, which is actually, for Alexey, it's the same for the guy in Goldman or for the guy in UBS. That is the area, to me, that's most interesting to collaborate on, because actually that is something the industry needs. So this is, what you see right now in the industry is the biggest waste of resources and recycling going on, because every bank is doing the same. Every bank, Alexey's roadmap will look very, very similar to the roadmap in JP Morgan and Goldman Sachs for the non-core stuff. I mean, each of you have your own little niche thing you want to do and you can compete on. But I think that's the way to look at it for me, right? You need to, as a bank, look at what I don't want to own that I just want to save money on, and it will not make me any different than any other banks. You shouldn't do that yourself. You should find like specialized fintech people to do that, companies.
It's kind of interesting that the value chain of the bank itself is being decentralized a little bit, in that it used to be quite tightly vertically integrated, own and control and operate the entire value chain left to right, from consumer through to capital markets, from customer experience touch point right down to the...
I think that's dead. I really think that's dead. And even when some of the banks are saying we are IT companies, they're not IT companies. They're really not IT companies. At its core, I think for me, a bank is about custody and like that security, and then providing core services. But it's definitely not an IT company. That's not what we see, at least.
Interesting. Paul, what are your thoughts on what are you seeing the areas of collaboration and value that are starting to appear as you look at some of the banks and the financial institutions?
Yeah, I think there's a lot of value at the moment in the smaller suppliers and suppliers and fintechs understanding what the banks want to do, what they want to see, and the processes that they want from these companies. And I think it's important as well that the fintechs learn how they can speed up and make things quicker and simpler, so they're not putting too much time, money and resource into big, lengthy due diligence, for example. And also from the bank's perspective, I think when they got an endless pot of money, it's like giving life skills to children. They don't see the impact of that fintech who's not resource rich. They haven't always got the skills and the capacity to be able to answer these big, long-winded spreadsheets.
Spreadsheet with 300 questions in it, in which you can answer yes or no, and if you answer no, you're dead. It's kind of and also the yes or no cell in the spreadsheet, you could write pineapple in it and fail because there's no validation on the spreadsheet. There are some horrors I'm sure you've seen.
Yeah, absolute horrors. But I think, so we're doing think tanks and roundtables with banks and suppliers. And it's important that when the banks are saying, look, we want to find out this. And the suppliers are going, why? Why do you need to know that? You want us to have ISO, for example. Yeah, your security team will provide a probably more in-depth audit than the ISO probably will, or Cyber Essentials. So they're having to do it twice or 3 times. I think the collaborative side of that and understanding from each other how they move forward is really, really important. And not just making assumptions that, look, we send over 800 questions, we get that back in 3 days without actually understanding the impact on everybody in that business, and also the impact on them if they don't get the contract after.
I think the scary spreadsheets ask hard questions as well. So, what is your GDPR policy?
Yeah.
It's like, and also, how do you manage third parties? Which then suddenly you've got this Venn diagram of like, okay, so how do my third parties manage GDPR? And it sort of goes all the way down.
And the supply chain, So if you look at modern day slavery, for example, that a small company who don't turn over the criteria that they need to be able to report back into that still have to do that on their supply chain. But they don't understand it themselves. And how can you expect somebody who don't understand it to be able to monitor the larger suppliers? It's mind-baffling. I did work with a company once who sent over a massive due diligence and they said, "Are you ISO accredited?" Yes. Okay, don't worry about answering all these questions. It's fine.
Yeah, it's crazy. Fernando, you want to jump?
Yeah, and I think this all comes down to 10, 15 years ago, a bank will use to have 1-2 providers for a given program. It's the monolithical approach. You'll have one-stop shop, and you had a lot of risk and responsibility in making that one thing work well.
There's a 3-letter technology provider coming to my mind that nobody gets fired for buying from, right?
Exactly, and these days it's entirely different. In a digital bank that we help a client launch some years ago, I think we had 20 providers in 6 months supporting between fintechs and different elements. So we moved from a world where we have one very large relationship to a world where we have very small providers. And I think procurement, the way the organizations absorb knowledge, partner in understanding how that work needs to operate. One of the things we try to do in many of our digital programs, we try to have procurement in the room working ahead of time. So making decisions together with the team and working ahead rather than being retrospectively looking, but rather going forward looking. What are the 50 potential companies we may want to work with? Let's get ahead with all of them.
I remember speaking to one procurement professional maybe 4 or 5 years ago who had a separate fintech procurement team and said, look, this is really a front office for a procurement department. The procurement processes, budget, mandate, systems were all built for dealing with these massive global vendors who send you 300-page contracts, and your job is to go to war with them to try and not get screwed over as a procurement team. And that's your motion when you are dealing with a company that's this big, that has 6 months of runway, and you just end up drowning them, and you throw people that are used to dealing, procurement team to sales team battles at them, and the fintech company can be overwhelmed.
That's why it's gone over to innovation now in the larger banks rather than procurement, because they don't understand the value of what that technology is. So I don't think that's a good move.
I have some sympathy, strangely enough, for the procurement process. And the reason for that is I think, of course, it's awful. It takes a long time. But we are seeing a little bit of the other side when you talk about the smaller guys, right? So if you imagine a world that's getting quite tough, for the past 10 years, it's been a bull run, and every fintech company is getting funded in the world. What we're going into now and what we're seeing in the past 6 months, we see quite a lot of inbound fintech companies looking for money. And they're desperately looking for money. And you look at the customer list of some of these fintech companies, and look, it's quite an impressive customer list. And if you play that record forward, you're going into 2023, there will be not 1 or 2 or 10, but tens of, maybe hundreds of small fintech companies that will actually struggle to raise money. It's going to be really, really tough. 2023. That's, I listened to a panel earlier today, and there was a lot of optimism about 2023. But I think the venture space or the earlier stage is a big struggle. So when you think about that, then a bank will now have to offload lots of fintech companies, which is a complete disaster. So we looked at a business where they had 3 or 4 large banks in Asia, about 100,000 end users, and these guys are out of money. So now they need to go to 100,000 end users and say, sorry guys, we're no longer supporting this great innovative solution.
Well, it makes you wonder about the M&A and the acquiring the downstream and everything that happens there. I mean, we saw JP Morgan acquired Nutmeg, the robo-advisor in the UK. That's more direct to consumer. But will they start to look at that supply chain as well and start to think about, do I need to do a strategic round to keep this company alive? And what does that look like? It's interesting. Alexey, what are your experiences like?
No, maybe I just wanted to add first, to what Paul just said. I think you can also consider one more side to this. So there is, a fintech, a bank, and then there is also an end client. Let's say, a pension fund. So, for example, we're talking about a new settlement system for bonds or equities, right? So it's not only banks that has to do the due diligence, and sign a contract and underwrite a series of regulatory, reputational, and legal risks, but also the end client should do the same on their side, right? And many of these are now, we have been talking to some of them last 2 weeks, and they told us that their main concern is the lack of time. There's a lack of time to review. I mean, in that case, they were talking about some management ideas, but it's also you need a team. You need to spend money on legal, on technology teams, or your global security and something like this, to global information security or whatever they have, to be comfortable with whatever solution or platform.
When an enterprise is buying from another enterprise, but the third party of you is small, they have all of the due diligence we talked about to do themselves. So it's not just your due diligence.
But they have fiduciary duty to their clients, right? If you're a pension fund, asset manager, or insurance company.
Yeah, so it just, the complexity gets harder as you move up the stack. So we talked a little bit about some of the areas of opportunity that we can see collaborating. But Christian, you posed an interesting thought, which is areas of threat as well, from some of the market dynamics. So as you look at the market dynamics at the moment, where the next round of fintech funding is not guaranteed, it's not easy money times anymore. Where do you think the opportunities for fintech technology companies are, and where do you think the threats are?
So I think the opportunity, the environment we're going into in the next, I don't know, I think it's going to be tough. So the next 5 years, all banks are looking for short-term ways to reduce costs. So if you're coming in with projects that's going to take years and years before they see any kind of reduction in cost, it's going to be a tough sell. All banks we talk to are really focused on the budget now. So they're very careful how they spend money, but they spend money strategically where they think actually we can reduce the cost base. And that is structurally one of the biggest things that the banks are dealing with is their cost base is simply too high. So I think that's the opportunity side. The
Those
threat
transformation programs that are sold on cost savings here.
The threat for banks is lack of data. So if you think about a bank and what they know about their customer, and you compare that to an Apple or Google or anybody else, then you're talking about banks playing Little League soccer and you're talking Champions League or the World Champions League, right? There's no comparison. The information the bank has on a customer is just 1/10 of, or not even that.
And they have to give it away to the market through regulation as well.
Yeah, but they don't collect the data, right? They don't collect the same data. There's no comparison what a bank knows about you as a customer and actually somebody where you're using your Apple Pay and you're also using your phone and how you interact with different devices, right? You can't compare it. So I think that's the biggest threat. The banks need to, this is going to be a data game going forward as well, right? You need to understand the data around your customer and the banks are nowhere in that space.
There's some really interesting businesses that do alternative underwriting. Credit Kudos was the first. There's Prism Data. There's many others that will go look at your financial position at all of your bank accounts and use your financial behavior as a part of the signals that you use for underwriting. And
you can think about financial products. You want to sell financial products to your customers in the future, right? Whether that's on the wealth side or the private banking side. It's going to be really nice to have a lot of data on the behavior of that customer, right? And if you're at the bank, you're sitting in a silo. You know very, very little about the customer, whereas fintech companies or big tech companies operating that space, they know a lot more. So it's going to be a lot easier to sell products to them.
Yeah, that's the battleground and the opportunity. What do you think the battleground and opportunity is for some of the providers, and where do you think the threat is if you're in the provider space, Fernando?
So I think one of the things we see across the industry, financial institution, and even wider market is that organizations are moving to becoming more resilient. And that's something that we keep seeing as a tone, is resilience. That means a couple of things. Means that organizations are trying to become more efficient, and absolutely aligned with what Christian was saying. On second hand, they are trying to contain costs. and maybe the most important one for fintechs, they're trying to think about themselves on how can they become more profitable, how they can generate more
Unit economics matter.
right? So when we think about all of these, this means a couple of things when we sum it up for collaboration. Means on one hand, there's going to be opportunity for M&As. That is clear, both on the fintech side, fintechs acquiring other fintechs, but also on banks acquiring fintechs. So M&A activity expected to be high because some of these resilient measures will not work for all fintechs, and some of them will have their runway short. So this is point number one. Point number two, fintechs will need to think about this access to customer. And one of the big drivers of funding spent is actually acquisition. So a good vehicle for acquisition is our banks. So most likely we will see more JVs where fintechs are going to collaborate more to create products and to inject their own technology and products through the collaboration. So there's maybe the second point. The third point when we think about this all dynamic is that we will definitely see fintechs being more repurposing some of their products. We saw, and maybe the best example is neobanks, where they all started great current account, but then, so how do you make money? And they start diversifying. You see Starling having step into mortgages, others. I would expect that to be kind of becoming a second nature of fintechs that they are going to start see as an opportunity to really diversify their products. So a couple of trends coming on the back of this. It's going to be quite interesting to understand next 3 to 5 years.
It is. Alexey, what do you think the opportunities are, and what are you kind of looking for? There's quite a few hands up if you work at a provider and sell to banks. Anybody? Zero in the audience work at a provider. One person. For that one guy, what do you look for from your providers, and what's the right way to approach an institution like yourself?
To be honest, maybe I'm not the best person to answer, but definitely I think one has to understand what is the use case, and I think especially in the environment of that we're entering now, right? It's we are living the era of probably the lowest interest rate in 5,000 years behind. Actually, which is not bad for banks, because the higher rates means very very good profitability and net interest income. But I think in general one has to understand what is the use case that one is trying to solve for and how it can scale. Because I think we have seen in many areas over the last 2 years a lot of very interesting pilots. It can be settlement, it can be payments, it can be some applications of distributed ledger technology and things like this, or blockchain. But I mean, nothing of this, or many of these things did not scale a lot. And it's
death by pilot almost. Yeah, think about how it scales before you get there.
Yeah. So and sometimes it can be at least since it's I have looked at personally. Sometimes it can be a structural hurdle. Maybe there is no regulation, or a very important part of this proposition, for example, has to be done or offered by central banks or regulators, and it's not there yet, at least yet. And it means that almost by definition, this new offering cannot scale. But I think this is it. Utility scale, which efficiencies it brings, and of course connecting to the right contacts with the banks.
Yeah, that's timeless advice. Paul, what do you find yourself saying to the fintech companies looking to partner? What are the things that you're sort of having to educate them on a common basis to be successful?
To properly explain what they do and the purpose behind what they're doing. I think a lot of the fintechs come to market with an idea of a problem they're trying to solve, but they can't probably put that across to the banks because it may not be something that somebody in procurement or somebody in innovation has necessarily seen themselves. So they're unable to empathise with that situation.
Yeah, the enterprise sale is different to the developer first sale, where it's like, here's the API docs, you figure it out, and then I end up landing a big fintech client. Now I'm speaking to a bank who might need a little bit more explaining of where this fits in my reality.
Yeah, and they need to, because I think somebody mentioned it earlier, where they're solving, I think it was yourself, they're solving a small part of the problem rather than a bigger part. So one thing that we try and encourage or have done previously was trying to engage in the others that are part of that process and try and come up with a collaborative idea of how you can go in together as one to sell the process rather than the small element of it.
That's interesting. So rather than dealing with one giant whale of a vendor, you're actually curating a school of fish.
Yeah, because when I was working at a company called Lending Metrics, we did all the decisioning behind it. So we all did all the business risk, understand what was going on. But a lot of the banks didn't understand their own business rules and their logic behind stuff. And what they want is a loan management system, which is not decisioning. Loan management is automation, where decisioning is actually collating that risk and automating that risk. So we partnered with somebody so we could offer that whole solution and really take them from manual underwriting off to automation, which is what they needed to do, and really fix that consumer journey, not just the customer service, if that makes sense.
Yeah, completely. And I think these things would have traditionally been sold by a large vendor who ticked all of the boxes on the RFP. Somebody who's been through a lot of procurement with a bank, there's always the question in the procurement spreadsheet: do you have this capability out of the box, with configuration, with customization? It's going to be built within 6 months, 12 months, 18 months, or whatever else. And that out of the box is not a qualitative question. It's not, I have it out of the box and it's high performing. It's yes, no.
Yeah, and you're only a few changes away from having a hard-coded platform then, aren't you? That's not scalable. And that's the issues that they have, where a lot of the suppliers will make quick changes to satisfy a large institution, where it's not the right thing to do for their platform or their company,
Yeah, it's that sort of almost pastoral care that you're doing for that fintech company is helping them. Yes, you might really want that deal, but perhaps you should say no to winning that little bit of business because you're never going to win there. That's an interesting point. So, Christian, what are your thoughts on the conversation so far? And as you think about where partnerships are going, where do you think we're headed over the next sort of? I know you mentioned the market's going to be tough over the next 5 years, but where do you think we're headed from that macro perspective, and what do you think that means specifically for partnership?
Well, I think the consumer or the customer of the bank, the habits and the way they're dealing in the world is changing, and the banks are set up the way they were 10 years ago. So if you look ahead for the next 10 years, it's not possible for banks or asset managers to keep doing and operate the way they've done. So I think there's a massive change of infrastructure. When we talk about these big infrastructure pieces, when you say one solution, I think that whole concept is dead. Nobody wants that in the bank anymore. They actually don't want one vendor to do everything. And if they try to do that, they will also lose, because actually there's great competitors in each of the niche areas of a bank. And the only way to solve that for a bank is to be flexible enough to work with the people that can actually solve these niche problems. So I think to solve it, we're looking at not so much like a platform play. We're more looking at how can we let companies become part of a bigger thing, because actually the onboarding side, the procurement side is one of the core problems for banks to move fast. A lot of technology today is API based. We talked about open banking, so it's actually getting more flexible. You can say from an operational point of view, but like the procurement process is still very, very old fashioned.
It's nuts, isn't it? One of the best blogs I ever read by Peggy McCormack was called APIs All the Way Down. And he described Stripe as being like the finance team that you hire as an API.
Yeah.
And I thought that was wonderful, because if you go look at the departments of a bank, what department of a bank can I hire as an API?
Yeah.
And is that core to me, to your point earlier?
Yeah, there's so many things happening. There's so many new technologies that you look at AI, you look at blockchain, you look at the digital asset space. There's so many things hitting financial service at the same time. So if you're not, as a bank, willing to kind of invest in that future, then you're going to be left behind. I think.
And how do you enable that as well? It's interesting that when everybody else zigs, Jamie Dimon seems to zag, and we've seen they've actually increased their technology capex when everybody else is trying to reduce it, because the interest rate environment's changed, and yet there's a lot of that investing in the core technologies and platforms to enable some of this stuff, and M&A happening as well.
Well, most of the core technology in banking is built by banks, right? So it was built 30 years ago when the behavior of the customer were different. So you're not going to be able to continue like that. So really,
and it was built with the limitations of the technology at the time. So we didn't have great networks necessarily.
No, I agree. I agree.
So as we round out, Alexey, we've got only a couple of minutes left. What are your thoughts as to what the next sort of 5 years start to look like from your perspective? Do you think a lot of these pilots are going to start to come to production? Do you think we're going to see in your world, fintech partnerships really making a difference for your customers?
Well, hopefully yes, because as we have seen over the last few years, on numerous occasions, there are a lot of parts of the traditional financial system which, in theory can be made more efficient. For example, settlement times. At the moment, if you settle bonds between two banks or even two entities of the same bank, sometimes it doesn't settle without any additional manual work straight away. So if this can be improved, it would of course ultimately reduce costs. Will allow at least regulated banks to reduce their capital that they have to provision for this business, reduce liquidity costs, and ultimately contribute to the bottom line. So I hope that we'll see more of it. But I think for this to happen, you need to see something done at scale, with the proper network effects.
Yeah, if it's not going to impact liquidity and it's not going to impact costs, then it's hard to justify moving towards it in a meaningful way.
Exactly. So it should offer us everything that we have now, plus make a significant improvement.
Yeah. Paul, what about you? As you look out for the next 5 years, do you think we're going to see more partnerships, and if so, how do we get there?
Yeah, I think so. Well, I hope so, because that's kind of what we're doing, is building upon that. So, yeah, I'd like to say yes. A lot of companies, a lot of banks, they want a stronger relationship, but I think that there's two concerns that we got to help suppliers through, which is one, too many MVPs, and how they build off the back of that, how they scale up off the back of it, and also then being enterprise ready. Because it's okay having a product they can go and talk to a bank about, but unless they're enterprise ready for that bank, it's not going to go anywhere. I also think that a lot of the banks need to change their process. I think when you're talking to them in the procurement teams, nobody knows who's the signer. Nobody knows who's the one that's going to go, yeah, you can have that budget. And so what we're trying to do is take that friction away and give the supplier the ability to be able to go and put their platform on there, not have to put the money into selling it, but the bank can then look at it and go, actually, that's a good fit for us, and run their due diligence. So it takes that friction away. They can run all the checks through. There's different levels of authorization if you need to get sign off, but ultimately throughout the platform you should be able to understand who's going to be signing what off under what process. But I think if we don't have that, I do think it just stalls, you bottleneck.
The ambiguity makes everything harder, doesn't it? It's who fintech over here does not comply with your information retention policy. So now I've got to go find the policy owner to get that sign off. But they then go, oh, well, wait, doesn't the data privacy officer need to talk about this? And you end up in this sort of, what is the actual process question? And it should be baked into a system.
Yeah, and people are putting a lot of emphasis into compliance and making sure that they are compliant without actually understanding what level or compliant they need to be, or being ready to be able to go to a bank and talk to them about their compliance level. And a good example of that is the FCA. If you register for an AISP license, you have to be registered under a PSP. So you're doing a lot of incident management that you don't need, but you've got these policies in place. I don't understand it.
Yeah, it's crazy. Fernando, closing thoughts for the audience as we close out.
So how much time do we have? So a couple of things, right? We will continue to see. I think banks have been extremely focused on dealing with everything that's happening around customer disruption. But we still need to understand very large organization, millions of customers, and regulated entities with a lot of focus on risk. So what they will continue to do is to effectively reinvent their core. That means infrastructure, a lot happening there, a lot happening on the core banking system side. JP Morgan announced partnership with Thought Machine. There's several other on the way. So we expect next 5 years a lot happening in that direction. At the same time, this innovation element, the banks haven't cracked. So we will expect to see better and more models of JVs. I think if I need to bet on one thing, the JV model in the next 5 years is going to expand a lot. The adoption of fintechs as part of the process, as part of the procurement model, I think it's there. We will see a consolidation, expansion, but I think there's the two big thoughts for banks and collaboration with fintechs, in my view. Everything with regards of the infrastructure and reinventing their core and core banking system, cloud, all of that's going to happen data. And the other thing is around JVs and how to absorb maybe M&A, maybe more JVs, but that's also going to be a big trend.
It's going to be interesting to watch. Well, audience, I hope you'll thank this wonderful panel for the conversation we've had today.